Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was. A wrap of the biggest stories over the past week. I'm Sean Aylmer. Economics, cryptocurrency craziness, vaccine rollout delays, and booming equity markets. That's the week that was. Let's start with financial markets. The local share market headed towards new record highs this week, with stocks across the bourse rising. The S&P ASX 200 hit a new 13-month high, well over 7,000 points. It is now nipping at the heels of the all-time highs back in February last year. Confidence about the economic recovery, boosted by strong economic data, notwithstanding some hiccups around the rollout of COVID-19 vaccinations, is driving investors. The technology stocks were the best performers this week, though discretionary healthcare, financial and material stocks all did well too. The utility companies were the worst performing, followed by the energy companies. Special shout out to the gold stocks, which were the most volatile this week. They fell and then they went up. It's not just the local market doing well. All the major indices on Wall Street, the Dow Jones Industrial Average, which measures the country's largest 30 companies, the broad-based S&P 500 and the tech-heavy NASDAQ all hit new records this week. The economic news in the US was strong, and the Federal Reserve Chair Jerome Powell said he was determined to keep rates low. That's pushing Wall Street higher. Asian and European markets are trading at or close to pre-pandemic highs. The party in equity markets continues. In currency markets, there was a bit of movement as well. The Aussie dollar appreciated against the US dollar after weeks of doing not much, and cryptocurrencies led by Bitcoin and Ethereum hit new record highs. It came after the first digital token exchange, Coinbase Global, listed. It holds the digital currencies of over 56 million people, and its share price surged on hitting the NASDAQ. It just gives cryptocurrencies a little bit more legitimacy. Oil prices surged this week, and that's not good news for we car owners. OPEC said it believed increases in production would be hoovered up by greater demand, and a barrel of crude pushed beyond $66. Gold prices were also higher. Not a huge amount of rhyme or reason to that one, given the precious metal normally does best when times are tough. It was a big week for international news, really big week. Chinese regulators fined Alibaba around $2.8 billion after finding that the massive e-commerce group had abused its market dominance. Its share price then surged, with investors relieved the inquiry was over. But then Ant Group, which owns about 1/3 of Alibaba, was slapped with new regulations which will curtail its activities. Beijing clearly doesn't want big tech companies becoming too powerful. Staying in China, the world's second largest economy grew by 18% during the March quarter compared to a year earlier. 18%. That's massive. Okay, it was inflated because the first quarter of 2020 was peak pandemic, but still. Boeing grounded its 737 MAX jets again just months after clearing them for takeoff. Microsoft said it would spend $20 billion on voice recognition company Nuance Communications. Washington said it would put sanctions on Russia and dismiss 10 diplomats for meddling in last year's presidential election. Egyptian authorities impounded the vessel that became wedged in the Suez Canal and demanded $900 million in compensation. Britain reopened after being in lockdown for 3 months. Could you imagine the pubs across the country? And the US said it was pushing pause on the rollout of the Johnson & Johnson vaccine after 6 recipients out of nearly 7 million developed a rare blood clotting disorder. And finally, US President Joe Biden said he'd pull the remaining troops out of Afghanistan 20 years after entering the region post 9/11. Australia will also pull out our remaining 80 troops, having sent 39,000 through the region over the past 2 decades and suffering 41 deaths. On to local news. What to say about the rollout of COVID-19 vaccines in Australia? It's a shambles? Now, that's in part because of the federal government's ineptitude, but it's also in part because we can't get our hands on enough jabs. Last week, the government made the decision to halt the rollout of AstraZeneca jabs to people under the age of 50 because of fears around blood clotting. Fair enough. Pfizer's vaccine became the jab du jour, and the government secured 20 million doses. Well, that sounds good. Problem is, we don't know when Australia will get the doses, and the physical rollout seems to be plagued with misinformation and a lack of transparency. That's what the premiers say. By the end of the week, the Prime Minister said he wanted to take a more hands-on approach. Mass vaccination centres were now an option, and hopefully everyone would get at least one jab by the end of the year. But no one's very sure about that. Australia Post was in the spotlight after former CEO Christine Holgate and Chair Lucio Di Bartolomeo both appeared before a Senate inquiry into Ms Holgate's departure from the group. The chair said she left of her own accord, surprising the board, while Ms Holgate said she was forced out after being humiliated by the Prime Minister in Parliament and fell into depression. It was all over the decision to give Cartier watches to 4 senior managers late last year. Prime Minister Morrison admitted he did see red, but disagreed he needed to apologise. All in all, it's a mess. I have great sympathy for Ms Holgate, who did what many before her have done, give bonuses for good work. It was a great week if you're in the housing market. But then again, what week isn't great in that part of the economy? Prices kept rising. Both the bosses of Westpac and Commonwealth Bank said prices would jump by between 8 and 10% this year. Last weekend's auction results suggest they may be a tad pessimistic. Former Prime Minister Malcolm Turnbull appeared before a Senate inquiry into media diversity and went for the throat of News Corp. He said the media giant was utterly liberated from the truth and campaigned against his government in an attempt to restore Tony Abbott to the Liberal leadership. News Corp was like a political party, a threat to democracy and utterly unaccountable, Mr Turnbull said. In corporate news, the airlines were out this week spruiking their wares. Both Qantas and Virgin said the government's half-price airfare scheme had triggered a surge in sales, and both were upbeat about domestic travel getting back to more normal levels in the first half of next year. But international travel still remains problematic. Santos said its chief executive, Kevin Gallagher, would get a $6 million incentive payment to see through growth projects at the oil and gas group through to 2025. That's a very large and unusual payment for a CEO. The bonus payment made a little more sense when considered next to rumours that Mr Gallagher was a key contender for the top job at market leader Woodside Petroleum. Meanwhile, over at Woodside, its CEO Peter Coleman will step down early, and the board's appointed current head of development and marketing Meg O'Neill as acting CEO. That makes 3 females running top 20 companies in Australia, the others being Elizabeth Gaines at Fortescue Metals and Shamara Wickramanayaka at Macquarie Group. It was an interesting week for the buy now, pay later sector. Zipco reported a quarterly jump in transactions and its share price surged. It took the opportunity to go to the market and raise another $400 million. Between them, Zipco and market leader Afterpay have raised $1.9 billion this year, and the 4 founders of the 2 companies combined have sold $139 million worth of shares. Meanwhile, boss of Commonwealth Bank Matt Comyn said it was time for the sector to be regulated, something it's assiduously avoided so far. I think the regulators are coming. Origin Energy downgraded its full-year guidance after being hit by an adverse ruling in a gas dispute, meaning the cost of the supply of gas will increase by up to $40 million this financial year and $80 million next year. That triggered a slump in its share price. And shareholders at Coca-Cola Amatil agreed to a $9.8 billion bid from Coca-Cola European partners, ending 50 years of trading on the ASX. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest news story of the week was the economy. What a week! When the Reserve Bank eventually lifts the official cash rate, the governor will look back to this week and think, that's the one that made me think different. Let's start with the labour market. The unemployment rate fell to 5.6% during March after 70,000 new jobs were created. As Commonwealth Bank boss Matt Comyn put it, the jobs market is miraculous. Fears about a jump in unemployment post-JobKeeper, which ended last month, now seem unfounded. There are new jobs in every state, across most industries. More people are now looking for work than ever before. We're still a long way from full employment. That's why the Reserve Bank is sticking to its guns, saying the next interest rate hike won't happen till 2024. But most economists think they'll have to change their tune soon. It's not only the labour market. Business conditions are at 12-year highs and confidence is strong. These are the sort of conditions needed to persuade business leaders to invest. And so far, business investment has been a missing piece of the economic rebound. And consumer confidence is at an 11-year high. That's pretty good given we've just come off the first recession in 30 years. Consumption makes up around 60% of the economy. So happy consumers mean lots of spending. The local economic rebound is roaring along. The sleeper story of the week was about Whitehaven Coal. It came out this week and downgraded its half-year earnings forecast. It did the same thing less than 4 weeks ago. In the meantime, the chief executive, Paul Flynn, sold $1.7 million worth of shares. Presumably everything Mr. Flynn did was within the rules of the company. And if he owns plenty of shares, why shouldn't he be allowed to sell them? But it just looks really bad when a CEO sells shares and then downgrades a stock. I reckon there's a lot more in this story to come. The most remarkable story involved Ghana, a country I know very little about. A couple of weeks ago, shares in gold company Resolute Mining plummeted after the government in Ghana decided, without warning, to cancel the company's lease of the Bibiani gold mine. This week, the Ghanaian government said it would restore the leases at the mine, triggering a massive jump in Resolute's share price. Resolute said the government had taken into account that it was the country's largest gold producer and it wanted to maintain investor confidence. Maybe, but it just shows the risks involved in investing and working in some less developed economies. Remarkable. My favourite story this week was about truck drivers. Chris Ellison, a billionaire, runs Mineral Resources, one of the best performing stocks over the past 12 months, up 160%. But his company has been hampered exporting iron ore because it can't get enough truckies, in part due to the COVID-19 lockdowns. Yesterday, it downgraded its earnings outlook as a result. Love the fact that finding someone to drive a truck is the core challenge of a multi-billion-dollar company. That's why it's my favourite story. And that's everything you need to know from the last week. I'm Sean Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.